Good evening, I hope you're all doing well. Welcome back to another video lesson on June 22nd, 2021. What a fantastic day in the markets. I mean, it's been a lot of movers, a lot of interesting kind of moves on some rare stocks that you would not expect, some completely expected movers. It's been a really fun day, and I look forward to going through some of the plays. So the big one that I completely missed, and you'll find out later on why I missed it, I was busy with 3 other plays, is Wsrc. I mean, this is your standard first screen day OTC 800% runner. Opened up today at roughly 2 cents and closed near its highs, very strong at 25 cents, right? So if you take the span from the beginning to the close, you're looking at 830-40%-ish. And what makes this trade so significant in my mind is a number of reasons. First of all, there was a lot of shares traded, so there's no doubt there's a big volume pushed into the stock most of the time. But besides that, they also have a really good catalyst in the sector that they're operating. So this is a gold mining company, and they're going to take an acquisition stake in a gold mining operation that's got 3.2 billion projected income. So whether this thing actually goes through or not, what's more important is the actual hype behind Wsrc and the sort of volatility that's available to be played on it. And what I really like about the way this finished is, this thing typically, when you have these massive OTC runners, they typically are designed to suck in people who are chasing, right? So the idea is to suck you in at maybe tomorrow's breakout. We finished up here in the 20s today, right? So I don't know why the chart's not showing properly, but I guarantee you, Wsrc, look it up on your own screen if you want. It's closed at 25 cents today, so just a glitch on the chart. Something like this is designed to suck in money, right? And the idea here is that once money is poured into this, if they can bring the price down, it's going to cause a panic, and that panic will shake people out, right? And then whoever ends up capturing the shares that are sold back, right? So if I'm buying a panic, then I'm buying the shares of people who are freaking out. And typically, when there's such massive volatility going on, there's usually a second and a third leg available to continue running. Okay, so because the mass volatility is available, we have really big news. We had big volume today, historic volume in the last 3 years, let's just say, and we've broken out of key levels. This thing likely is not done, okay? So even if it crashes heavily, you've got to realize that it's up 800%. So if it pulls back down to 15 or 12 or something like that and then runs again, that's the sort of volatility that I'm always looking to capitalize on, and I'll be watching Wsrc pretty intensely the next few days and potentially into next week. Okay, I'm not expecting it necessarily to happen tomorrow, but I do expect there to be really good opportunity to trade Wsrc. Today's trades were focused on what is it called, TRCH and ALF and IDRA and CLOV. So I'm gonna just cover those and go through what I was thinking, what I was trading, and what to take away from it. Okay, so let's bring Interactive Brokers in here. Perfect. There we go. Interactive Brokers. Just open up that. There you go. Perfect. Are we all good here? Yeah, we are. Perfect. All right. So first one was TRCH. I mean, this is a fantastic squeeze play. Like if I put this on even a daily setup, you can see that I was trading this on day 2 and swinging into day 3, thinking we could continue running, right? So really beautiful trade. And what's so nice about this is it's the standard percent gainer that consolidates for a better part of a few months, and then as you capture it again, right, and it shows itself again, it has a little bit of consolidation up here, and then finally it explodes and runs. And this was on watch, and if you're in the membership site, you saw me talking about ALF as far back as June 16th. I was talking about watching this. So I was on this day right here. I said, listen, this thing is near a key level to break out, and any moment it can explode. So we needed a red inside day followed by a strong, green day following that, and then poof, there was the massive short squeeze that I was on watch for. And, the nice thing is when you prepare for this stuff in advance, it gets fairly straightforward to trade them. And, if you're dealing with something that moves up 50, 60, 70% in a day, it's pretty easy to make money on them. Okay. But the point is obviously understanding why this happens, what goes on behind the scenes to create a play like this, and then how to get out of it. Now, I think TRCH, it only yeah, so I held through the entire day because I thought we had a pretty significant dip, and if you know my plays, I usually don't mind if there is about a 30 to 50% dip off of the highs, but if it starts testing the sort of levels of 50% off of its highs, then it starts looking pretty shady, and that's usually when I start looking at opportunities to get out. Okay, so just going back to trading this, so this would have been yesterday's trade. So I was buying essentially the spikes, I was buying the dips, I was adding into my position the entire time. I'm just adding. Like if you look at my time frame here from 9:45 in the morning until 2:45, I'm sporadically just adding to my position, right? Slowly but surely, as the stock is proving itself. You hear me talking about a stock proving itself quite a bit. And I had opportunity to sell it multiple times, right? And I did it. I really thought this dip right here was going to be the bounce, and and I thought that this right here in the morning, there was no volume associated with it. So when it came back down to these levels, I really was like, you know what? I wouldn't mind if this thing held right here, and it did hold, and it came back down. And as it started doing this sort of chop zone right here, I was no longer interested because now you've broken down that basic 50% pullback. You've gone beyond the range of the move that you're in. So in my case, I'm in on this move right here. So this move from here to here, pulling back to here is about 50%, right? And because I was dollar averaging the entire time, still was able to walk away with a decent profit. Not a big trade because I held through some of this stuff. And I really thought this had legs to run. It also didn't help that they offered an overnight offering, right? So they did a stock offering overnight, and it did it at the market price, and as a result, there was massive sell-off. When the offering closes, TRCH likely has a gap to fill here, so I am watching TRCH still for a potential rebound trade. So I'm not done with it, but just something to talk about and discuss why I did what I did. Next trade today was ALF, right? So I talked about ALF already, the importance of capturing these percent gainers in the past on TRCH. The same thing applies to ALF. So if I go back here, and you see what's going on here? Back in the 5th, 6th of May, massive percent gainers, pull back, we get the massive run, consolidation, and then poof, the massive squeeze. So you see a trend here. Like look at ALF, look at TRCH, right? They're following the exact same pattern. You got the percent gainer, consolidation, retesting highs, red day, followed by a massive explosion. Coming to ALF, same thing. Massive percent gainer, pull back for a month, retesting previous highs, bit of consolidation, and the massive squeeze to the upside. Okay, and I'm not even trading these perfectly. That's the other part. I'm trading them like significantly higher than than where you could be trading them, right? But if you know the nature of what I do outside of trading, I'm always busy with clients, always busy with running also the business, which is Omnificent. So I'm not always there at market open to trade. So oftentimes I do find I miss these plays. So I find when that's the case, I come back midday to trade. This whole thing is just trying to show you how you can really do this multiple ways. You don't have to be there from 8 a.m. to let's say 8 p.m. or 6 a.m. to 8 p.m. to trade and be profitable. You can show up at your own time. So decent, basically it's called $1,150, $1,200 profit. These are all US, obviously, so we're sitting about $1,500 profit with TRCH. And what was going on here really is just another short squeeze play, right? So dollar cost averaging into my entries, right? So, really waiting for the dip, waiting for those massive dips before I start buying. I don't wanna just buy into these green candles. I really want a true sign, which usually is visible on the 30-minute candles. Okay, like when you start seeing this right here, you see how this 30-minute candle is weak, followed by strong. Once I get confirmation, then I start buying into them, right? So this is a really, easy way, for me at least, to spot what's going on with the price action. Here we have this massive run all the way up. A lot of people are FOMOing the entire way. A lot of people are buying and chasing and also getting rewarded for bad habits, which is what usually gets them in a future trade. And they're like, oh, how come it didn't work? Well, it's because you're chasing. Anyway, what I like to do is I like to wait for weakness. When I start seeing weakness and finally confirmation with the red candle, and when that candle finally reverses and shows strength from the bottom, then I like starting to scale into my position and wait for weakness again. You see, the same pattern is repeating itself. I wait for weakness, I buy. I wait for weakness, I buy. Scaling out a little bit here as well, and then I buy, and then sold into pretty damn near the tops. And then just held a little bit just to give some chance to dip here. And now, this doesn't look too bad. To be 100% frank, this looks okay here, but I just didn't want to hold it overnight. Oftentimes, like you saw with TRCH, you're always an offering away from waking up to a massively dropped stock price, especially for an IPO like this that just went public not too long ago. Okay, so yeah, so decent $1,200 there. The next one was IDRA. If you were in the membership chat, you heard me or you saw me alert IDRA yesterday. So this is just a standard SEC, what do you call it? SEC Form 4 play. And if you don't know what that is, I talk about that in depth in my coaching program. So if this is something that interests you, get in touch. Let's see if the coaching program is right for you. But a bit of a preview into the SEC Form 4 is basically, I'll show it to you right now. I'm just going to type it in. Basically what it is Form 4 is a filing of insider trading. Okay? So you can see right here that on 18th of June, there was a filing that so-and-so, which is also the chief operating officer of IDRA, bought up 50,000 shares at $1.19, a total amount of basically $60,000. And then you have the filing here as well that you can go through. You can see the proof and all that sort of stuff to see that this was actually done. So you might not quite understand why this is an important thing, but anytime an insider as filing to buy stocks, such as the director did a couple weeks back, and now the COO, it's usually a really good sign that there is some reason, they're aware of some sort of reason for there to be upcoming press releases, something that's bullish about the company, whatever, right? So there's a reason that they're adding to their position size as insiders. So usually the way this is perceived on the outside retail world is if somebody is betting on their own company, that's probably a good sign for the outside to bet on the company as well. So then the market sentiment comes up, and it's not just that you trade an SEC Form 4. There's a lot more that goes into it. One of many things that goes into it, for example, is when you see a stock that looks like this, okay? Where a stock tanks from 6 all the way down to, like, what is this, to 160 in a matter of a day. This is a horrible chart, right? This looks really, really, really bad. So what do you think this does to the shorts? This definitely traps shorts in the entire way. So what do you think is going to happen when we start taking some of these shorts out in these levels? You're going to get some moves. So to me, the 150 level was key, this sort of failed spike that we had right here. If we could sort of break through the 150 level, it was a promising sign for me to get in. And if you get into the coaching program, I talk a lot about why I price in my entry points where I price them in. But as you see, I bought IDRA at 149. Okay, there's a very specific reason behind I'm not buying it at 150, but I'm trying to get it in 149s, 148s, 147s, and that essentially just has to do with the theory and how price action usually works, especially on a breakout, especially on a dip. So here you got the beautiful ABCD pattern followed by the pullback on good news, good insider trading news, and look at this massive spike. And here, typically you won't find me sell near the top if I think there's more more room to run. So here when it held more than its 50% pullback, I really liked the bounce here. But as soon as we started seeing heavy level 2 jumping into after hours here, I wasn't interested anymore, and I'm really glad, right? I mean, what a great trade here. So basically taking profits at the 17 and 25% mark. So let's just average that around 20% trade between 250 and 615. So 4 hours to make 20%. You know, most people, they wait a year to hopefully make 10% on their mutual funds and index funds. So, you know, if you can learn to consistently make 20% and cut your losses at 5% over and over and over, that's how the account grows by 700 to 800% a year, provided you do not let the losses get out of control. And that's where most people fall apart. Okay, that's the number one place people usually screw up, and that's why trading, it gets a bad rep. It was actually funny. I was talking to one of my clients today, and he was telling me that, you know, when I first talked about the 7 to 8x account factor, how it's possible to really get 700, 800% a year return on your account if you're systemic about trading. In the beginning, even to him, it sounded like, yeah, right, that can't be true. But it is true. And it's just, it takes about a month or two of you seeing, observing, putting in screen time, watching the markets, seeing the types of moves that happen, and learning how you can really capture them by preparing ahead of time. And I mean, really, you look at plays like TRCH, you know, if I put them on daily candles, and I think they'll make more sense. But, you know, you do look at these plays like TRCH that essentially have such massive runs. You know, you've got a breakout here in the 5s that runs to the 11s, right? So that's 100% available trading room for you to make 15, 20% in. You got trades like ALF, same sort of thing, right? Where you have these massive, you know, 90%, 100% available trading room. You can make 15, 20% there. IDRA, you know, you've got this room today from the 150s all the way to the 2s, 50% room. It's easy for you to make 15, 20%. It's not hard to see how this rinsed and repeated, pardon me, will add up significantly over time, so that you know, the net result is 7 to 8x. And 7 to 8x is, in my opinion, a pretty conservative ratio, because if you've got a good winning ratio on top of the ability to not get emotional with your losses, which is what the most people struggle with, and that's why I think our coaching program is probably one of the best that covers how to get over the psychological shortcomings and why people take losses, right? So if you manage and learn about why you do what you do and why you hold in hope, and you learn to really come out of that mindset, the markets are a very lucrative place to make money, both to the long side and the short side. Right now, the markets are booming, so back at it we are. We're playing long positions. If the markets are going down, you play short positions, okay? So there's really money to be made all year round in the markets if you know what you're doing, okay? So my overnight position now is just in CLOV, and I'll just like to explain that real quick. It's basically nothing more than a massive previous percent gainer. It's dipped down. We've seen some signs of strength here finally. So I'm just swinging this 500 shares. I'm down 15 bucks because I bought it in after hours. I'm not really taking that seriously. The volume is super light. Basically just buying this resistance here and ready to scale in. Small 500 shares, small $6,000 position. And then I'll start adding into it throughout the next few days, potentially to fill the gap. This thing already ran, pulled back, now it's starting to teeter out. So I think there's room to run, okay? I could be wrong. If I'm wrong, I'll cut my loss at 5%, walk away, and find another play. All right? Yeah, so that's just what I wanted to talk about. I hope you all have a fantastic evening and you got something from the video lesson. Leave a comment below if there's any questions you got, and I'll be happy to answer with the best of my ability. Have a fantastic evening. Take care.